Okay, so we will start with a roll call, starting with Ms. Bowman.
Jennifer Lemon here. Robin Murphy present.
Mia Blitzstein present.
Leah Mulhern present.
Ross Whiting present. Charles Bordell Williams present.
And Pamela Henry present. So we will begin the Finance Committee meeting. And I will start with a motion to approve the September minutes.
So moved.
Second.
All in favor, say aye.
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 And the meetings are approved. So I will turn it over to Mr. Sweigard.
Pam? I was stuck. All right, good evening, everyone. Tonight, as usual, we'll look at the interim financial statements for the school district through the end of October. We will again revisit the budget and Act 1 timeline and the next step in that process, which is evaluating enrollment and how that impacts funding level at our building level and district-wide. We'll also take a look at some of the items that should be on the radar over the next month or two that will impact the school district's budgets and our larger expenditures, and kind of look at some trends where that might be headed. We'll take a very, very early look at projection through the end of this school year with some updated information and the impact it'll have on our finances. And the last item is a board action item, which is a budget resolution for the board to pass. Okay, so first up, taking a look at the district's interim balance sheet through the end of October. We typically look at cash and we say we're having a pretty financially solid year because our cash is increasing. And you'll notice this month, our cash is down year over year. And if you recall back to the facilities meeting, we talked about how we were beginning to pay some real large expenditures for the stadium. Well, that money has been parked in the general fund in the form of due to the cap reserve fund. And now that the cap reserve fund needs the money, the general fund is funding it. So you'll notice down here on interfund payables, we have a decrease in money we owe our cap reserve fund, and that of course came right out of cash to pay it. So we're starting to see our cash reserves come down a little bit on the general fund side, and you'll continue to see that as we pay for this project, since we're not using it. And part of the reason for that is just keeping all our cash in one concentrated area just makes it easier for us to plan out our investments, our future investments, and our cash flow for those investments. And you'll see a little later the impact that has when we're able to keep a large cash balance, and we can look way into the future and reap whatever return we can get from going out a little longer, which were decisions we made 2 years ago. Down here on the bottom, you'll see looking year over year, our revenue is less than last year at this time by $4.4 million, and our expenditures are more by $1.4 million. And we'll take a look at why on the next page. Oh, any questions on the balance sheet before we move on? So as I just mentioned, our revenue collected through the end of October is $103 million. This year versus 107, almost $108 million over the last year. You'll see that our state source revenue and our federal source revenue continues to lag way behind, obviously because of the budget impasse. That money has not been released. This $5 million is primarily almost entirely made up of the Homestead Act monies. That is a separately approved fund. So those were approved to be distributed back in April. Looking on our local source side, the $4 million increase is made up almost entirely of real estate tax collections. And there's also $2 million of stop loss collections, which is our reinsurance on high claimant health insurance expenditures. And that will come up later as well in this presentation. Some expenditures of note. So year over year, we have spent $38 million versus last year we spent 36.7. And of this $1.4 million, the increase is all in operations, which stands out. And if you recall last month, we discussed how we had spent $1.1 million on the roofing project, which is all in this number. So we spent 1.1 million. We haven't gotten the money back from the state yet. So that's really driving the increase. In the grand scheme of things, the rest of these numbers year over year are relatively flat. But we did expect to see some increase on our regular program, our instructional side, as our teachers contract does have increases in it, and our benefits related with our teachers contract has increases in it. On the special ed side, we are one payment behind to the IU on our cost plan, which is roughly $300,000. Otherwise, we'd be looking at a very steady expenditure year over year. And on the administrative side, last year, if you recall, we had a lot of principals start in October, and a handful of other administrators start later in the year. So this expenditure looks like it's more because of that timing difference. Now we've been, doing our best to pay our bills, but we've also been, slow to pay some bills because of the budget impasse. And I think you'll start to see, some areas pick up. We would expect to see increases in special education. We recall last year we had some tuition increases, and later in the slide when we do our very early projection, I think we're going to continue to see some of that this year as well. So year over year, our net change in fund balance to the end of October is $65 million versus last year was 70, a decrease of almost $6 million. And the vast majority of it is in this just delay in funding, delay in cash flow. Fortunately, we are not a school district that is largely dependent on state and federal funding, so we aren't facing some of the threats of closing that some of other districts are within the state. But it does impact us in terms of cash flow and ability to earn cash we receive. Any questions on the interim?
So we're looking at I'm sorry. I just
Dr. Whiting. Dr. Whiting.
Federal sources down because we're not going to get ESSER money, correct? Well, we have ESSER money in the
That's
prior.
part of the reason we had ESSER money last year that expired in 2020.
Because if I remember correctly, title money's like the federal sources of money's around $1 million.
That's correct.
Yeah. Okay. So we're expecting hopefully about around $1 million if the federal government passes an actual budget.
So the state of Pennsylvania is also charged with distributing the federal money. So whether they come back online or not, the federal government, we won't receive our money to the state
Until the state budget's passed. So we have a double impasse. Excellent. Not excellent. For the record, not excellent.
Excellent to understand.
Good to understand.
Yeah, thank you. Just clarifying, the money that we will get back from the grant for the roof, do we have to wait? That's not related. I know it's not related to the budget impasse that we don't have it yet, but do we have to wait for that to get settled to get that money back?
No money is coming out of the state
Until, even though it's connected to a previous, thank you.
so, and we still have to finish the application for reimbursement.
Okay, gotcha. Okay, thanks.
If there are no other questions, I will move on to our structural balance chart, which would normally have more of an arc like this. But because of the delay in funding, it's going to be a little wonky this year. It's a technical term. Historical tax collection, real estate taxes have a 2.5% increase over the prior year. It's still, we're still mid-range tax collection season. So once we get to the end of December, we'll know exactly where our real estate taxes ended up. Our EIT is still strong. Real estate transfer tax collection is still strong. And delinquent real estate tax collection is still strong. So for those of you who follow the stock market is still performing well. There are economic indicators that they're still performing well. We are in a metro real estate environment, so we're not in a part of the country that might see a more tremendous impact on housing sales and real estate transfer taxes. So, all I can say is so far so good. Looking on the earnings and investments, you can see we did have an increase from the prior year. That is because we had some of our larger long-term investments mature last month, and we received dividends and interest payments from that. maturity. But by the end of the year, I think we'll start to see more of a divergence. We'll have to, as you know, when we receive that money from those longer investments, we reinvest it, we're not getting the same return. Any questions on the interim financial statements before we move on? All right, so following the Act 1 timeline, we get our Act 1 index, which is 3.5%. That's the max the district is allowed to improve real estate taxes without special permission from the state. The next kind of shoe to fall, so to speak, would be our submission of our enrollment to the state of Pennsylvania on October 1st. So obviously the number of students the number of students drives the amount of money we have to spend within the buildings. And so looking at our current enrollment count through the end of October is approximately 4,120 students, which is a continued decline from prior years. Overall, if you're looking back 5 years, this is a really stable number. It appears to be more of a dramatic drop going back more than 10 years. But if you recall from our enrollment study, our enrollment is almost 100% driven by the birth rate in the greater Philadelphia area. So I think this is a trend everyone's seeing nationwide. Being a fully developed township, obviously there's not a lot of new housing starts. There's not a lot of opportunity for new families and students to move into the district. And this is just a graphical representation of that data. So you can see it as this is total enrollment. It is a very flat figure. So using this enrollment number, we plug it into a chart, into a formula by building. And then what we do through this chart is we establish what our school supplies budget is for every building. So we allocate a little over $1 million for school supplies across each building, and that's less than 1% of our entire budget. So if you look at this chart, last year we had $1,048,000 allocated towards school and classroom supplies. This year we'll have just a little more than $1,050,000. And using our enrollment, you can see the allocation across each building. Which is, there are some changes. Obviously, Elkins Park, this number has been reallocated to CBK East, and these numbers back across the buildings. All right, so we talked about receiving the Act 1 index. We talked about the enrollment report that was submitted to the state. So now we're really starting to build the budget. And we are waiting for the next couple of pieces of information to come across our email, which will also direct what happens next year. So I thought for everyone's benefit, we would just take a quick look at the major cost drivers of the school district budget. So our school district budget, the total budget was $140 million. Of that, $59 million was salaries, $19 million was pension costs, mandated pension costs by the state. Approximately $12 million was for medical, prescription, dental, vision insurance. $3.9 million was spent on special education tuitions. $3.5 million was spent on charter schools, $10 million on debt, $7 million on transportation, and $24 million on everything else, utilities, custodial supplies, you name it, across the district. So looking at these items, what we would expect to see next is the PSERS rate, which was released in early December. The last 2 years, this rate has been completely flat at 34%. This rate is largely driven by an actuarial study, which predicts the estimated number of individuals who will be in the pension system through the next X number of years, and calculates in a rate of return that will be received through investments through the fund. And because we've had such a strong economy the past 2 years, they've kept that rate flat rather than raising it up to 35, 36%, where we're supposed to be at this point. So I'm hoping, I'm confident the fact that we've had still a relatively strong economy, maybe not for everyone, but nationwide for investment return, the economy has been strong, that hopefully that rate sticks right around 34%. We don't have to deal with any sort of increase. So just for example, on $59 million salary, 1% increase is $600,000. So even the smallest fluctuation is a large number.
Just a quick question on this, looking at this contribution rate over, the past 20 years or so. If there's a formula, what factors into this formula, if you could, like the shortest possible compact answer, how did it go from no, very little contribution to such a huge contribution?
So my understanding is back when I was still in high school, at the turn of the century, they increased the amount of benefit that you got pension system. And that was for all state employees and school district employees. And that in turn, because the economy was strong at the time, and then as you had the dot-com bust and you had the financial crisis of 2008, the fund suddenly found itself poorly funded, 65% funded or less, which means action had to be taken to correct the fund. So they estimate the number of individuals who are retired and going to receive benefit. They estimate how long they'll still receiving pension benefits. They estimate how many individuals are still working and will receive benefits, and they calculate a contribution rate of return they expect to receive. And about this point in time was when they realized they had to change course and increase the contribution rate. And those were not really good times for school districts.
Thank you for that. Very concise.
All right, looking at health insurance, this is going to be interesting this year. If you recall last year, the market trend for health insurance increase was right around 8%, but we only had a 1% increase, which was a pretty big number for us. And it was through, concessions through collective bargaining we got from our collective bargaining agreements. This year, the trend is still sitting right at 8%. We've had some bad experiences in terms of very high dollar claims, because that seems to be what's driving medical expenditures across all industries, are new and advanced medical procedures that are still very expensive, and that's what we experience this year. We have a couple of very large high dollar claims. We are reinsured, so even though we had roughly $5 million of very high dollar claims, we're getting a lot of that money back in terms of reinsurance. But obviously a reinsurance company is going to have to make that money up over time. And I would imagine that's going to manifest itself in a premium increase over the next couple of years. So we should, by the second week of November next week, receive the first rate look from CPAST, and we'll know exactly what the beginnings of that increase will be. Oh, and then for illustrative purposes, the difference between a 1% increase and an 8.5% increase was about $680,000. So it was quite a substantial number. Next, looking at charter school tuitions as a driver of expenditures. Ever since COVID, our charter school enrollment has been very, very flat, which is a good thing. It's actually decreased slightly. So almost all 85% of all of our charter school students who attend charter schools who live in Cheltenham attend a cyber charter school. So it's a virtual option as opposed to coming to school in person.
80%?
85%.
85%.
So that has been a relatively flat figure, and that's why we're so anxious to hear about cyber charter reform at the state level, because it has such a substantial impact.
And that is flat, and we are nowhere near what some school districts are paying.
That is correct. The district I came from, we spent $9 million. Our neighboring district spent $18 million a year on charter school tuition, and there's codes bill I don't even know if they spent. It's probably a lot worse. So our total spend is $3.5 million for the 4 months. Last year, we did get a state grant for charter school. We got a charter school reimbursement grant as part of our state subsidy. Off the top of my head, recall it being around $300,000. That is off the table this year. So I think they're looking at other ways of charter school reform by trying to control costs. Looking at special ed tuitions, we discussed this in prior meetings. Tuition rates have increased. The cost of supporting services has increased. There's been a reduction of approved private school placements where the state will split 60-40 the cost of approved private school placements. And we've had a slight increase in enrollment as well. All of this has combined together to drive the cost of special ed tuitions up year over year. So just for instance, back in 2022, we had $1.3 million in special ed placement tuitions. And by guesstimate, based on our enrollment this year, we're looking at potentially $4.2 million of special ed tuition placements. So in 2023, that was a 40% increase, a 36% increase, another 40% increase. And we're hoping that number has kind of trailed off. Obviously, an evolving figure. The next major item potentially added to the budget next year is the debt for the Cedarbrook and the Glenside projects. So looking at what will be due for the 2026-2027 budget based on the projected amortization schedule, that's a $900,000 increase in debt service. And then an $800,000 increase and then a $600,000 increase year over year. So going back to this chart, adding all of those potentially worst case scenario situations up is roughly $4.27 million. And that's a little higher than some of the numbers I pointed out. But if I factor in salary increases through collective bargaining agreement and some of the potential increases that we just looked at, roughly 4.2 million. And the reason this is relevant today and to talk about today is because obviously December is usually when we approve whether we will whether our intent to increase taxes greater than the Act 1 index or to stay within the limits of the Act 1 index. The Act 1 index is 3.5%. And one of the caveats with accepting tax equity money through the Ready to Learn block grant last year, if you recall, was that the district cannot increase taxes greater than that Act 1 index. So a lot of this will come into clarity next month. We'll revisit this. We'll see where we stand. We'll do everything we can to try and find areas to cut costs and make all of this a little more easy. Now, that was a lot of information. So, any questions?
Just a question about the Act 1 index number. When was that? So last year, I remember it was 4%. Maybe I'm wrong.
I think it was 4.7 for us. It was the base index was 4%, but we were allowed to 4.7.
And now it's 3.5.
That was 3.5.
When was that number released?
That was released on September 30th.
Okay, is it the same release time every year?
Yes, this deadline is
September.
roughly follows the same.
Okay. Thank you.
Any other questions for the board? Ms. Ballhorn?
Just for the sake of clarity, and so I don't have to do the math in my head, I know the $4.27 million that increase, what you said is like a worst case scenario if you move all of those things, correct? What does that translate to in an actual increase percentage wise?
So a lot of it depends on what the state kicks in, which we don't know because the state, some years will provide $2 million of support on increasing the budget. And as of today, is indicated that nothing is question. But if it's fully funded by the district, a 1% tax increase is roughly $900,000. So it'll be more than the actual tax.
Thank you.
Any other questions from the board? Mrs. Sweigard, do we have any questions on that?
I do not see any. No hands raised. All right, no other questions on some of the budgetary items we're monitoring for next month. I'll move on to just a caution, a very early year-end projection. And essentially what this is for the most part, a lot of these numbers align directly to our district budget, with some tweaks here and there for some cost changes and some anticipated changes to revenues as well. So the first thing I'll point out is you'll notice that local revenues year over year show a decrease. So what that is if you recall, we have a couple large real estate tax settlements that are outstanding. Settling those by the end of the year would be roughly $3.7 million, one of which is already settled, which primarily drives this loss at the end of the year. So 3 million of the 3.7 is a one-time type settlement. So in essence, that wouldn't really indicate a structural deficit or a significant issue going forward. It's more of a one-time payment that comes out of our fund balance. But it is a hit to this year. It has the potential to push us into the lost territory for this year. Also, I don't have all of and potential state increases built into this yet because we don't know what they are. So that's still a pending item. Another area to look at, I did build in some of the anticipated tuition increases through special ed. They were slightly higher than budget, but we did find some areas and some ways in which to reduce costs this year to potentially offset some of those increases. So those are really the major factors in play at this point. Any questions on the June 30th, 2026 projection? All right, the last item is a board action item. And that is a recommendation to approve a resolution for the state to end its budget impasse. The resolution calls for full funding of public education and release of all federal funds to districts, compliance with the Commonwealth Court's ruling, the ruling from last year regarding equitable funding of all school districts, and subsidies and support that is in compliance with the rule that the Pennsylvania's education system is woefully underfunded, repayment of interest and fees incurred due to borrowing during the impasse, and cyber charter funding reform for school districts. So I will put a copy of that resolution up on board docs and distribute it after the meeting.
Is that coming from PSBA?
Yes.
I think the form did come to us. And it came from PSBA, so it may have gotten the 6.
All the other PSBA emails.
Yeah. Any other questions? So I will make my very last motion to dismiss the finances. This is my last time chairing the finance. So can I have everybody make a motion? No.
So moved.
Second.
The meeting is adjourned.